So, YouTube fam, today we have something a little bit different. I got a very special guest with me today. His name is TP Jordan. I'll put his Instagram right here. Um, he trades the same indexes as me and trades similar strategies as me. He's a teacher in my mentorship and as well as a teacher in my premium Discord. And today he'll be breaking down a trade recap of the trade he took, a little back testing session to show you guys the confluence he waited for, didn't wait for it, we did good and we could have done better, and ultimately the outcome of his trade. So without further ado, let's get straight into the video. Here with a special guest, y'all. He's gonna be introducing himself and going over his trade.
What up, y'all? TP Jordan. I don't got too much to say about myself other than, met my boy Armand in college and we just locked it on the charts ever since then. So, yeah. But as of right now, I'm just give y'all a little trade recap and show a loss and show a win and just how I look at it. Because, I'm planning on being a mentor for Armand and his Discord. And it's just a pleasure meeting y'all, man. Alright, so off rip, I start, 8:30. We're at a very bearish structure right now. We broke below all of these lows. You can see that, we're in a downtrend. Some people might call this AMD, accumulation, manipulation, distribution. So acknowledging that, we can kind of know that after AMD, what the market wants to do is settle somewhere and then continue its path. So I'm planning to see this settle above a high and then continue its path low. But sometimes it don't go that way. So what I usually do, mark out some more imbalances that's close by, because I trade just between the days. So I only have this London high marked out and this London low. I only use today's liquidity. Now some people might disagree with that, but I just find that's what it works best. So going to 15 minute, here's what else we see. It looks like we are going to the upside as of right now, simply because of this inversion right here. I know mom loves inversions too. So if price comes down at 9:30 to test the zone, it wouldn't be bad to get in for a trade here. But like I've learned the hard way to not trade before 9:30 or too close to market open. I feel like Armand knows the same. So
Yeah.
seeing that, I'm just gonna delete it. Not gonna lie.
So
That's just what I'm
why
gonna do.
why why is that? Why do you trade? Why do you not trade before 9:30? For those
If
who
you
might
trade
not
before
know.
9:30, you'll get caught in a very volatile market open. When the market opens at 9:30, it just rips up or rips down. And even if your trade is right, you could very much still lose the trade simply because the market is just not ready to continue its direction.
Hmm.
So I usually wait like 5 minutes after 9:30 just so the market doesn't pull any funny moves.
Okay.
For sure, for sure. So yeah, we see that we're emerging to the upside, but we're not really worried about that to be honest. So I want to get right before 9:30. So we'll go to 5 minute. And I usually, for me, I guess I'm kind of a scalper. Armand can call it because I usually use very very small time frames. But then again, he does too more so often.
Mm-hmm.
But right here you see the same inversion. It looks very very attractive, but we just gonna wait that out. So as you see here, what happens? 9:30 comes riding down to it. Bang. Now what happens after that? I'll wait to go to because we want to catch it. So as of right now, you gotta remember this right here coming down is our inversion area to the upside. It's our bullish inversion to the upside. So I'm expecting price to go up eventually, but as of right now, price is telling me to go down because we broke all of these lows and we have an imbalance to the downside, a bearish Ferrari gap that we are respecting. So most people can just go, well, they will go here, set this here, and go down and see how that plays out. But for me, I mean, look, it works for a little bit, but I target liquidity. So if I'm getting in this trade here, I want to target this London low. But eventually, what ends up happening, price comes back up, and I would have been stopped out break even because once it hits a 1-to-1, you should go to break even just to protect your capital. But seeing this movement here, right? us coming down into our bullish inversion zone again, what really happened? This blue candle right here, what that did was take our liquidity. So we took internal liquidity, so we have more money, more momentum to go back up. So those are two indicators that we're going to the upside. We're in a bullish inversion, and we took our own liquidity. Now, what's our third confirmation? We have this next candle here. This green candle really tells it all because price should not have pushed up this far if we've already taken liquidity down here, if that makes sense. So like if we're taking liquidity down here, we don't need to take liquidity up here. We already have it. So it doing this move here, it's already letting me know that price wants to just go up. And as right here, here's where I got in. And I always go below, a low. Target would have been like a 1-to-1, but you can always just stretch out your take profit and trail it. So as price goes on, what do we see happen? Bang. Would have been a nice trade. Whatever happened, it would have been nice. But using my actual trading strategy, which is waiting until our London low or London high gets swept, which just happened, now I'm really looking for a trade. So this London high getting taken, I'm already looking for a reversal. So the first reversal I see, I'm going to take it automatically every single time.
So real quick, can you break down why London highs are so important as far as draws on liquidity?
For sure. So London highs and London lows, really any session high and low, it's when you go on the hourly, it's and you can go on any time frame, but it's the overall biggest pool of liquidity. So it has the biggest amount of entries or like what is it called? Pending
Orders.
positions, I guess you could say. Yeah, orders. There you go.
Yeah.
Orders waiting to be filled or orders already being filled. So once price move past it, all of the sellers that got in here, they're most likely they're out. You know what I'm saying? And the buyers
The
that want to
retail
get in,
traders, right?
you said what?
The retail traders, like the investors.
You know more about that than me though. So,
Oh, okay.
but yeah, so that's exactly what happened here. Price moved up above this big pool of liquidity, which means that the market has a lot of strength to move whichever way it wants. To be honest with you, but it chose to move down. So this first inversion I see here, although we didn't have a change in state delivery just yet, I'd want to set a limit order right here at this short. Now before I actually get in on this limit order, I would number one second. I would go to another time frame to see if anything lines up with this bearish inversion. So I go to 2 minute. What do I get? You have an even bigger. Well, it just matches. This 2 minute inversion matches our 1 minute inversion. Now I know some people might think, oh, we're going back into where we just came from, like bullish. We just came from this bullish inversion, and now we have another bullish fair value gap. But this is all void now. And the reason I say that is because we already took our London high. We took a big pool of liquidity. Anything can get disrespected right now. But what's the most probable is this reversal because we have it set up for it coming right out of us taking that liquidity, if that makes sense, guys.
Okay.
And just watching how this plays out, you get filled perfectly. And that's just it right there. And that's why I'm TP Jordan, guys. That's all I got. But yeah, man.
Bang. So okay. So
Banger.
for the pocket watchers, how much did you make on this trade, bro?
2 bands.
2 bands. Oh, all right.
2 bands, yes sir.
2 bands, and that's a 1 minute time frame. So like 15
Time for me
minutes.
took about
Quick 15 minute. Quick little,
three, four, five. Like 10 minutes. Yeah, 10 minutes.
10 minutes. Quick little scout.
Yeah, still got something.
So to go back over your trade, what are the main confluences that you went off of and helped you catch this trade so clearly and catch this move that dumped like barely any retracements? So what was your main confluences?
So, excluding everything I brought up earlier, excluding that, the first thing I want to do or look for is our London high, our session high or low getting moved above in simple terms, which is really a big sweep of liquidity. So we did that here. Now on 1 minute time frame, it looks like you just got candle exposure, but on 5 minute or another time frame, well, 5 minutes does the same thing. on a bigger time frame, it looks like a wick. You see that? That's our big pool of liquidity that got swept.
Right.
I want to see that happen. And once that happens, I'm looking for one of two things. I'm looking for a continuation model or a reversal model. What did I get here? A reversal model would be this inversion we see here,
Right.
going to the downside. A continuation model would have been if it literally is this right here. If right after this candle, price continued to move up. That's our continuation model. And some people might have gotten in here, but that's not enough confirmation for me to get in here for continuation.
Right.
So that's the second thing I'm looking for. That type of model. And as you see, we got a reversal model. So with that being said, we have an inversion here. You always have to look at other time frames because something might go against your bias. You have to be aware of that. Then I have another inversion here. Bang, we close on this, go all the way down. And with oh yeah, that's good. Something I always look for out of inversions, especially after it sweeps a session high or low, is for it to make another imbalance telling us where to go. So even though we have this inversion here on 1 and 2 minute, we also have this now made bearish for value gap. And look what happens. Price comes and fills that along with our inversion because it's an imbalance. They're all imbalances. It just depends on how you look at it.
Right.
Everybody calls them different things, but they all do the same thing. So price comes into it. That's where you want to get in at somewhere in here, and you want to put your stop loss somewhere above here. And then after that, how do I know where to target? You target the next pool of liquidity. Some people might have targeted this because we have relative equal lows, but always just go for the session low or high. And that's it. It's very simple. You wait for something, wait for a session high or low to get moved above. You wait for a continuation model, or you wait for a reversal model. After that, it's all just money, bro. It's paper.
Okay, so one last question. I know I've been getting into discipline a lot in my sectors of my boot camp. I just want to ask you, like, so when you caught this trade, like, did you like want to make more money after this trade? Did you take another trade, or did you just kind of like take your profits, take what the market gave you, and kind of like sat on your hands after that and went about your day?
Yeah, so after I took this trade, I immediately got off because any winning trade, for personally, my rules are this: win or lose, one trade a day. That's it. Win or lose, one trade a day. Now, if you quote unquote in quotation marks accidentally get in, that's something else. But I fully took this trade and I won. Now let's say if I would have lost this trade, me seeing all of my confluences work together so well and I still lose this trade, that's just telling me the market wasn't ready. It's not my fault, but I need to preserve capital so I can trade another day. If I would have gotten in again, like let's say I went for a buy here. Like if I went for a buy here and I got stopped out here, like then I'm down 500. That's usually what I risk. Then let's say I'll try to get in somewhere else, and then now I'm down again. I don't let go of my bias. I wanted to keep winning. You don't want to do that. Now you lost for 2 days instead of just losing for one.
Right now you
After
lost
this
double the
trade, I
money.
saw how much I made. It was I think anything, honestly, any winning trade, no matter the number, is an amazing day because you can live to trade another day. You're still making money, and overall, it's gonna add into your overall profits. Like you can't just look at one day. I try to look at the week, and if the week is bad, look at the month. If the month is bad, look at the year. If the year's bad, okay, tough titties, bro. Suck it up and keep going. Like everybody's gonna have them 10 times, bro. But being disciplined is something that helps you to continue to trade. It'll keep you at peace as well. If you keep straining yourself to try to take more trades, you're not gonna want to trade. But if you just let things happen, but okay, whatever, learn from it, move on, and go back to the next day, you're gonna be a better trader and you'll be profitable way faster.
Absolutely. Yep. Less is more in trading. So I want to say thank you for coming on, TP Jordan. It's been a pleasure seeing this banger right in front of my eyes. How you caught it, your confluences. Bro, I thought this was a perfect trade. I would have took this trade myself, bro. All the confluences lined up. A plus, bro.
Thank you, brother. Thank you. I learned from the best, man.
That marks the end of this video. Hope you all enjoyed. Like I said, something a little bit different today. Had one of my close friends slash mentors in my Discord break down his trade and his confluences and why he took the trade that he took. If you enjoyed this video, make sure to leave a like. Subscribe if you're new. Turn on post notifications so you never miss a video like this. As well as leave in the comment section if you have any questions or you want to see me cover a specific concept next in any other future trading videos. If you want to be a part of a community with like-minded traders, those who may be on the same level as you and trying to learn and trying to grow with you, then I would advise you to join the Income Architects Discord listed down below. As well as if you heard any concepts in this video that may have seemed a little bit advanced or that you didn't quite understand, I would advise you to go take a look at the trading bootcamp videos, which will also be listed in the description down below. As always, thank you for watching. It's been M and Q Mondo. Peace.